Parthiv Jhonsa, Vice President, Anand Rathi Institutional Equities, joining us. Parthiv, hi. From a earnings point of view, Tata Steel numbers, especially the domestic numbers, were very good.
Yes, if you see the entire overall Tata Steel numbers, whether you talk about standalone, console, or even for that matter, European operations, all the three numbers were very well, in line with our estimates. We had expected, the console EBITDA to be about 9,100 odd crores, and the numbers are similar to the numbers what we had actually expected, around 9,250 odd crores. If you see your domestic realizations for Tata Steel was up almost about say 9,000 rupees plus. Your EBITDA per ton, surged almost towards that 17 and a half, 18,000 mark. And that was purely supported by the higher, realizations, better volumes and techno-economic parameters on a standalone level. If you see UK operations, the losses has actually come off to a great extent. What the management recently guided in today's call was that by the time you go to second half of the year, you can see an even better number from UK, supported by the improvement in the pricing. Also for the quarter two, the management has guided for a better realization as far as UK and Netherlands is concerned, with of course about 1500 odd rupees of a reduction in realization in standalone. But that is a known fact, right? Every single tier one mill, and all the four has actually come out with the result now, has guided a similar kind of a reduction because of the recent drop in your long steel prices, particularly your long steel prices, basically. So the numbers I would say were very well in line. The commentary was very robust, whether it be Capex or whether it be the quarter two or the a couple of months going forward.
Parthiv, what was surprising for me was the realization, which is EBITDA per ton for Tata Steel, and this is despite the fact that coking coal prices were going up. There was a pressure on raw material coming in as well. It was able to get that. Do you think it's an internal efficiency that pushed up the realization, because there was a headwind from raw material point of view?
See, realization and the raw material are very different aspect. All right, raw material somewhere drives the prices of steel, but realization is a very different aspect. Realization for companies like Tata, or even for the other three companies which are listed, right, the tier one mills, the realization is not 1:1 with your HRC or 1:1 with your long steel prices. These guys, produce a lot of value added products, and that is the reason why they get a lot of premium over and above these prices at the end of the day. If you see your HRC and your rebar in last quarter, particularly around April month, they had surpassed about 60,000 level. Thereafter, the rebar definitely came down. It was down almost about 20% from the high. But however, if you see in last 1 month, the reduction of rebar is not, as in the long product is not as bad as what it looks on the face of it, right? The reduction is about 1,500, 2,000. And however, in the recent couple of days, the price have again started going up. There, you have formed a bottom. There was a lot of inventory in the system which has started again moving out. There's a good order book from your infra and construction sector. That is why if you see the prices of long products has gone up. They are up about good 1,000, 1,500 in last couple of days. If you see now flat steel, the flat steel prices have not come off as bad as long steel, whether it be May end or June. They are down from say 60,100 odd level to say about today 57, 58. When we also speak to our channel check, when we speak to our vendor level across all the companies, across all the different walks of utilization of steel, what we feel that these prices are sustainable at the end of the day. So the things are not as bad as it looks. The prices are sustained and will hover around the similar level, and that is the reason why you saw good realization in quarter one. The drop of over 1,500, 2,000 is a known fact for quarter two. But again, once you start moving away from monsoon quarter to say quarter three, and especially post Diwali, the price again starts picking up.
And do you see demand sustaining at this point in time? And because the mix is now more towards premium and high-end value products, do you see the demand is sustaining there?
Absolutely. If you see globally, all the larger mills, right, they are moving more towards value added because that is where your juice is there at the end of the day, right? Just selling a commodity, a commoditized regular HRC or a rebar will not fetch you the kind of EBITDA won't fetch you the operating margins what it fetches you when you start selling value added. So these all are high approval, high margin, high entry barrier product, right? And every company has a specialty. Tata would have a specialty in auto. Jindal Steel has a specialty, say in rails and metro rail, rakes and all. So every company has a certain specialty, and that is where they are cashing in. Okay, so the higher the value added, better the realization. As far as demand, definitely, if you see our domestic demand has been growing at about 7 to 8%, and that is what has been guided from day one of April, right? We are expected to grow about that 8.5, 9% this year, and these four mills would be the biggest beneficiaries out of it. And the growth or the demand growth is not only expected to be for this year. Even we will keep on growing our demand year on year.
Between JSW, Tata Steel, and Jindal, how do you see the performance of these companies? Which performs much better?
So against our preview, if I want to compare, JSW was a beat. The other, whether it be Steel Authority, Jindal Steel, or Tata, they all three of these were more or less in line with our estimate, right? As far as your quarter two commentary is concerned, all the four has given out a very similar kind of commentary for Indian operation at the end of the day. What I liked about Tata, or even for that matter, companies like Jindal Steel, is that the recent change in the management of Jindal Steel that gives a certain confidence over and above what you are already building in, right? That's something on the base of it, right? Companies like Tata Steel now, when management says, okay, once you start moving to second half, your European, especially your UK operations, which has been bleeding, but the intensity of losses has been coming off. It's expected to do much better in second half. So that gives a lot of comfort at the end of the day. Companies like JSW, they are always talking about growth from capacity expansion, value added product, and they have been doing that at the end of the day. So we are very confident on the entire ferrous pact. On the contrary, during Q4, we actually upgraded Steel Authority from hold to buy. We upgraded Tata Steel from hold to buy. So as a sector, we are very positive on ferrous at the end of the day.
And from a capex point of view, you just mentioned about some of them, but most of them, including JSW and Tata Steel, have announced capex. Do you think now the fresh capex has now been done for specialized and specialty steel or specialized products with high premium?
No. So as you grow, right, as a country, you require more and more specialty product, because a lot of these products, especially say for example for say CRGO or CR anything with that quality, we are more of an import dependent country. Now JSW is putting those capacity, right? So a lot of these capacity what are coming in value added is actually an import substitution at the end of the day, and that is where we require as a country. So it helps a country to grow at the end of the day. Number one. Number two, whether JSW talking about say grow, doubling down, or Tata Steel say moving from current capacity to say 40 million ton, they have a very clear roadmap which has been laid out. Okay. Even nowadays, now Steel Authority has also started talking about the capacity expansion that eventually they'll add at ISCO, and thereafter they'll keep on adding at other locations as well. So capacity expansion is the need of an hour. It will help you, over next 15, 20 years as and how you grow as a country and against different value-added product, basically. And also, as I told you, each and every company has a certain specialty, and that is where they are adding capacity. That is where they are growing at the end of the day.
Thanks, Parthiv, for that perspective. That is Parthiv Jhonsa from giving us a perspective on the entire steel, and especially after the Tata Steel numbers which came in there.